I want to talk more about gold today. I mean, obviously, it's making fresh highs, but I want to bring on Rob Levy, bordergold.com. You can find Rob there, major gold dealers. They also, of course, Rob writes a commentary every week, keeping the latest of what's going on. Hey, Rob, thanks for doing this, but let me just throw this one at you. I'm sure you saw that stat that said for the first time in what, 3 decades, central banks own more gold than they do treasury bills?
It blew me away, Mike. As you said, 30 years ago was the last time this happened, looking at the foreign FX reserves of central banks around the world. And as you said, the nominal value of their gold holdings more than what they're holding in any other reserves or U.S. Treasuries. Sorry, more than U.S. Treasuries, and so much of that story to do with the appreciation of gold, but also the fact
Mhm.
they continue to buy gold.
Well, that's been the driver. I mean, all the way along, you've seen that consistency, and they get World Gold Council announces X amount of ounces were bought this, last year, that kind of thing, and it's been there. But man, we're seeing record highs now. Let me just ask you: have you seen that in traffic at Border Gold? Have people come in? Are they more interested? Because I can't believe how much I'm reading about this now.
Exactly right. And, a flip kind of switched at the beginning of September. And so much of
Hmm.
the story in this gold market and part of the appreciation story, January 2024, you had 2000 US dollar the ounce gold. And you look at today or this past week following the job numbers where a rate cut looks certain, and you're at
Yeah.
3,600 US. So just a huge gain. But yeah, with the retail investor that maybe didn't fully participate in parts of this rally over the last 2 years, definitely an active start to the month of September where people are coming in, continuing to purchase and buy gold.
Are you worried about the degree there's bullish talk out there? I mean, that's usually the sign, at least, of a short-term top. When everyone's bullish, who's left to buy? But yet, I'm still seeing, like, I think it was J.P. Morgan. Didn't they come out with another sort of forecast of maybe 4,000 gold?
Exactly. Where the buyer is going to keep coming from. And you're right in the sense that all the Wall Street banks are getting more bullish with their forecasts as the
Hmm.
prices get higher. So, yeah, whether JP Morgan Chase calling for 3,750 US the ounce gold, very bullish comments from Goldman Sachs this past week, it talking about the potential for 5,000 US the ounce gold in 2026, where they paint a scenario and they say, okay, what are the privately held US treasuries? And if people just allocate 1% of that into the yellow metal, that's extremely
Hmm.
bullish for gold prices. But, even, commentary from big Swiss bank, UBS, with the narrative that people should look to have a mid single digit allocation to gold. I mean, that's just not a narrative that you've heard in the last short while.
Hmm.
So, yeah, I mean, I do get nervous when gold is the page one story, which it has been. But at the same time, you have these sort of stories where maybe the pullbacks become opportunities because you look at the narrative with central bank buying, and then why individuals might want to have a little risk diversification and increase in allocation to gold.
Well, I'd be certainly in that camp and have been for a number of years, saying the one guaranteed thing I see is that the governments are going to continue to devaluate the purchasing power of the currency, and gold is a brilliant way of protecting yourself to that degree. But I also think of things like the politicization of the Federal Reserve. Now, it's interesting. Greg Weldon thinks, for example, rates are going down anyways. It's not because of President Trump. They've got a much weaker job market, as we're starting to see. But Greg's been talking that game for a number of months, saying, hey, these stats aren't right. It's much weaker. The Fed will lower rates. But I just wonder about the politicization and the perception of that, of the Federal Reserve. Because again, I think that's more fuel for central bank action. That's what President Trump wants. That'll again put more upward pressure on inflation. Presto, gold gets more popular.
Yeah, and I think you're exactly right on that. I mean, whether it's the same version of a different story, and it has been currency debasement. Whether these
Mm-hmm.
record deficits and debts that they're holding, and then you add one step further to that and say, okay, will the Fed? Is there a chance that they'll do the president's bidding? And I think that's a risk that's being currently priced into the market. However unlikely it is, it's a seven-person FOMC governor council, and assuming that they'll all do the work of the president,
Yeah.
whether that will play out or not. But at the very least, it's a risk now. And it's one that people are talking about, and a reason people are talking about gold for that reason.
And of course, there's always the momentum. I mean, once something starts moving, could be in either direction. In this case, we're talking a bullish move in gold. More people jump onto that momentum. They may be late to the party or short term late, long term. I mean, I'm sort of cautious in this, by the way, Rob. I sort of look at any dip as a buying opportunity. I'm back to talking about stuff like dollar cost averaging if you don't have a major position yet, all of
Yep.
those kinds of things. But yeah,
Yep.
I still have full confidence that over time that the currency will be debased and gold will be rewarded.
And I think that's the challenge. I mean, to that point, with gold being expensive, that's the challenge of a retail investor right now, where they look at
Mm-hmm.
these markets and they see, well, everything's expensive, and I don't want to be too much in cash either. So, yeah, I
Yeah.
mean, gold at all-time nominal record highs in U.S. dollars at 3,600 U.S. the ounce. But if it's that sort of dip in the toe in the water, as you said, averaging into a position, maybe it's the least dirty shirt in the closet, so to speak. I mean, that's a phrase I've heard a couple times from our clients and investors this past week.
Well, I'm sure you're going to be busy. This thing is not over by any means. So much to talk about, and I appreciate you finding time to do that with us.
Always a pleasure. Thanks for having me, Mike.
Bordergold.com. We'll have more with Rob in the weeks coming up because there's going to be a ton more to talk about on the gold front.